Colleagues, good afternoon. We're about to start the press conference by the Governor of the Bank of Russia, Elvira Nabiullina, and the Deputy Governor, Alexei Zabotkhin. And to begin with, we will hear the statement of Bank of Russia following the Board of Directors meeting. Good afternoon. Today we have made the decision to raise the key rate to 18% per annum. Earlier, we specified 4 triggers for raising the key rate. All these factors have materialized. Firstly, underlying inflation has been rising. Secondly, there has been no cooling of consumer activity. Thirdly, the positive output gap in the economy has not been shrinking, while labor market tightness has been growing. Finally, new pro-inflationary risks associated with the sanctions have set in. All this means a significant deviation from the baseline scenario. Therefore, we have considerably revised our macroeconomic forecast. It now assumes that monetary policy should be tighter to bring inflation down to the target. I would now dwell on the reasons behind our today's decision. Firstly, as regards inflation. Price growth rates have been persistently high in recent months. Underlying inflation accelerated in Q2 24. The first weeks of July suggest that elevated inflationary pressures have been sticky, even if the indexation of the housing and utility rates is netted out. Households' inflation expectations have been rising for 3 consecutive months. Businesses' price expectations remain elevated. Analysts' expectations for the next year have started to deviate from the target. The inflation forecast for this year has been revised upwards to 6.57%. These figures take into account the high accumulated inflation rate over H1 24 and assume its substantial slowdown in H2 24 owing to tight monetary policy. Inflation will decrease to 4.5% next year and stabilize close to 4% further on. Secondly, the economy. The GDP growth rates remain high in Q1 and Q2 24, while inflation was accelerating. This suggests that overheating in the economy has remained considerable. Labor force and production capacity reserves have been almost exhausted. Shortages of these resources might cause a situation where the economic growth will be slowing down despite any attempts to boost demand. Moreover, this boost will only further accelerate inflation. This is actually a scenario of stagflation that could only be stopped by way of a deep recession. Today's additional tightening of our policy will help prevent such a scenario. Being aware that labor shortages are becoming a major constraint on the expansion of output, companies are making considerable investments to increase labor productivity and automate and robotize production processes. However, firstly, it will take time for the investments to achieve the effect. Secondly, companies' costs for equipment purchases have been increasingly rising due to generally high inflation and additionally due to sanctions. This is limiting businesses' potential to enhance labor productivity and upgrade production equipment. Although the supply of goods and services will continue to expand, even in such conditions, this process will not be as quick as the current demand growth. Moreover, high inflation and rising costs are forcing companies to constantly adjust their investment projects. Low inflation that our monetary policy is aimed at will enable businesses to implement their investment programs more efficiently, owing to more affordable funding and lower temperate costs. Taking into account the GDP statistics for H1 24, we have revised upwards our estimate of the economic growth for 24 to 3.54%. Next year, the expansion will slow down to 0.5 to 1.5%, and by 2027, the economy will achieve a balanced growth rate of 1.5 to 2.5%. Thirdly, monetary conditions. Over the past 6 months, the key rate was somewhat dampening the increase in credit activity, but its growth rate is still far from being balanced. What is the reason for this? Firstly, the expansion of the demand for loans has significantly exceeded our estimates. Expecting the key rate to be cut already this year, as was assumed in our forecast, enterprises have continued to quickly increase variable rate borrowings. Consequently, the growth rate of variable rate loans has accounted for nearly 99% of the overall expansion of corporate lending from the start of the year. Moreover, borrowers have been ready to take out loans at higher interest rates because of growing inflation expectations, record high profits, and aspirations to capture promising vacant market niches. Secondly, the amount and structure of fiscal incentives have affected lending to a greater extent than we presumed earlier. Companies that sign state contracts have been willing to take loans at elevated interest rates, expecting payments from the budget. And, of course, another important factor has been subsidized mortgage lending programs. These changes in budget expenditures have entailed a strong credit impulse. Thirdly, consumer lending has been growing faster amid the rise in incomes of a considerable proportion of households, enabling people to spend and save more. Thus, the expansion of lending has surpassed our forecast, while the level of the key rate in such a situation has turned out to be insufficient to return lending to more balanced growth rates. Subsidized mortgage applications peaked in June. Expecting the termination of the subsidized program, borrowers were making a last-ditch effort to raise loans at lower rates. The demand for mortgages contracted in July. However, the first 2 weeks of July actually brought a pause in transactions since the government had not yet approved new family mortgage parameters. Therefore, the data with elevated growth rates in June and decreased growth rates of lending in July are not representative. We will only be able to draw more meaningful conclusions about steady mortgage lending dynamics after these temporary effects have been exhausted, that is closer to the end of Q3 24. The results of H1 24 have shown that we need a higher level of interest rates in the economy, including taking into account a higher estimate of the neutral rate. We have revised it upwards by 1.5 percentage points to 7.5 to 8.5%. This is in line with the comprehensive review of the changes in the economy over recent years associated with the structural expansion of the demand for investment, a higher risk premium, the easing of the fiscal rule parameters, and the increase in neutral interest rates globally. From our previous meeting, yields on federal government bonds and money market rates have soared for all maturities. The upward shift of the yield curve has already priced in all our signals regarding tighter monetary policy, including our today's key rate. Tighter monetary conditions will help ensure a more balanced growth of credit and increase the propensity to save. Now, I would like to speak of external conditions. Our view of the world economy and the situation in commodity markets have remained nearly unchanged. In Q2 24, the value of exports stayed the same in annualized terms, while the dynamics of imports were subdued. The situation in imports is explained by both companies' difficulties with cross-border settlements and the impact of tight monetary policy. According to high-frequency data, including that from our regional divisions, businesses' transaction costs have been rising. This might erase the effect of the earlier ruble strengthening on prices for imported goods. Considering the actual data and the growth prospects of the world economy, we have updated the forecast of the balance of payments. Exports will be slightly higher, while imports will be somewhat lower over the entire forecast horizon. We have revised upwards the forecast of the current account surplus to $72 billion for 2024 and to $57 billion for 2025. I would now dwell on the risks to the baseline forecast. The ratio of risk is still shifted towards pro-inflationary ones. Firstly, this is the risks that the economy will remain overheated, which might be attributed to both persistently elevated demand and supply-side constraints. Inflation is its main indicator. Secondly, as regards inflation expectations, the more strongly high inflation becomes embedded in expectations, the harder and more painful it would be to return the economy to a low inflation rate. Thirdly, the risks related to external conditions are still there. Although Russian companies have been adapting to the sanctions, they are facing extra costs that are ultimately translating into price growth. Disinflationary factors include a more considerable increase in the economy's potential over recent years than assumed in the baseline scenario. Businesses have been making large investments to expand production capacities and enhance labor productivity. However, it is difficult so far to estimate how significantly these efforts will increase the economy's potential. Finally, we will continue to take into account the effect of fiscal policy on aggregate demand. If fiscal policy normalization deviates from the adopted path, this will notably affect the level of the monetary policy tightness. Winding up, I would like to comment on the future path of the key rate. We will be keeping the key rate high for an extended period, for as long as needed to bring inflation back to the target and stabilize it at this level. If necessary, we admit the possibility of a further increase of the key rate. This is reflected in our updated forecast, where the key rate path for the next 3 years has been notably raised. Thank you for your attention. Colleagues, your questions now, please. Introduce yourselves. Don't forget to identify your agencies. Rita, please. Thanks very much, Rita Szpilewska from the TAS agency. Dear colleagues, could you please tell us whether the board today decided more resolute increase of the key rate? Maybe there have also been some arguments voiced in favor of keeping it as it was. Thank you. An absolute majority of those who discussed this were in favor of raising the rate to 18%, but there were proposals also to preserve it at the current level of 16%, allowing that in order for the inflation to be brought back to the target, more time is required, so that considering the lag effect, the toughness of the monetary conditions could play up to that. But also some suggested that the rate should be raised up to 19 and 20%, which could be considered as a level where, with a high level of probability, one may talk about the end of the key rate increase cycle. So we decided to raise it to 18, but as I mentioned, we do not rule out further increase. Our further steps shall depend upon the data coming in. Colleagues, please, Nastya. Anastasia Savelio from Interfax agency. On August 13th, the fact inflation runs out to stop operations with the Moscow exchange. Have the risks of putting an end to the yuan trading come to an end? How strong is the problem with payments, including yuans? Is it possible to solve this problem quickly? And my other question is whether the central bank supports the suspension of the arrest upon the sequestration of the accounts assets, if it is, let's imagine, part of the overall Russian asset seizure. And how much money is on asset accounts right now? Several trillions. How much? As far as the risk related to the cross-border payments, which is the risk of the secondary sanctions, have grown, we do see it in how payments are currently struggling. The companies currently are looking for ways and means in order to make sure that the payments take place, but let me not further comment any further. As far as the imports are concerned, what was the question? Right, yes. The situation with the payments does affect imports, but in our mind, another factor is further tightening of the monetary conditions. To separate one factor from the other is a bit difficult, so I would rather say the effect we're seeing comes from both of them. As far as the assets are concerned, I previously noted that we're not disclosing the amount of assets held on the asset account. As far as the response measures are concerned, like it was mentioned previously, this is the prerogative of the leadership of the country. Thank you. The next question comes from Lipetsk, from Sergei Malikov, the Lipetsk newspaper. Please. Good afternoon, Elvira Sakbizarovna. Could you please tell us whether the board today considered the shock treatment option to raise the key rate by 7 points immediately, and why did you decide to give up on this particular decision? Good afternoon. Thanks very much for the questions. Any dramatic raise of the key rate may be resorted to by central central banks, and we did it in the past, but usually that happens in two cases. First, when you need to nip the financial stability risks in the bud, like the case was in Russia in 2014 and in 2022, and also in cases when the reaction on the part of the monetary policy to the inflation growth is too late. Specifically, as far as the last case we can refer you to, like in Turkey over the past few years, where inflation really jumped up to 80%. The annual one remains at 70%, while the key rate for a long period of time remained low. So it had to be raised in Turkey at some really vast steps. But we don't have any financial stability risks, nor do we have any big gap between actual level of rates as well as the level of rates which is required to slow the inflation down. Now, the price growth rate in the first half of this year have already been somewhat lower than we remember them in the second half of last year. I mean, that increasing the key rate last year's one did generate the effect upon the slowdown in the H1 inflation. But additional tightness is required in order for the process of inflation lowering to be irreversible. But this country's situation is way different from what we can see in Turkey, and that is why this is the option that we did not consider, because currently we cannot really hike the rate higher in order to bring it closer to the target quicker. Why should we not do that? Because this particular measure, as they say, this is the medal with two sides to it. Yes, we can achieve a stoppage of inflation and even provoke inflation with a prohibitive key rate, but the result won't bring the economy to a stable and balanced growth, but excessive cooling of demand with excessive volatility everywhere in interest rates, in manufacturing, in employment, and a very strong consequent deviation of the inflation downward from the target. And so this excessive volatility will bring about negative consequences for the economic development, and that is why we don't have any need for such kind of a shock treatment solutions. Alexei, Mr. Zabotkin, please, I would like to elaborate. Not within the context of a shock measure, but I would like to ask you to pay attention not as much to the changes of the key rate right now from 16 to 18, but rather to how the forecast trajectory changed, because the average rate for next year, if you look within the middle of the range, has been raised from 11 to 15% for 2026, from 6.5% to 10.5%, and both signifying changes not by 2 percentage points, by 4. And that specifically adds additional tightness to today's decision. Thank you very much. Please, Sergei. Sergei Bolotov of the Russian Gazette. Could you please tell us what was the biggest mistake that multiple experts made in the beginning of this year when they forecasted quick reduction of the key rate? And another question, if I may. Over the recent months, the banks have raised the deposit income, showing in some cases 2, even 4% interest rate higher than the key rate. How long that might last, do you think? Thank you. The analysts, like we, expressed their views towards a quick reduction of the key rate on the basis of the data that was available to us in the beginning of the year. So what did we see in the beginning of the year looking at the data? The current inflation considerably slowed down. Inflationary expectations were declining. The tightness in the labor market as a minimum stopped growing. The monetary conditions were tightening up. The consumer activity growth slowed down, and simultaneously the household's propensity to save was becoming stronger. And so the experts took into account in their forecast, as well as we did. And at that time, our forecast, on the basis of the available data available at the beginning of the year, specifically pointed to a certain space for the key rate to be reduced this year. But maybe such a confidence on the part of the experts in the financial market and the businesses was further strengthened effectively that throughout the 10-year period of targeting inflation, that was the first case of the cyclical overheating, when a longer period is required for the high rates to be there in order to cool the demand down. And so those episodes that we've lived through in 2014 and 2024, I mean, the peak levels of the rates were short-term because they were related to the external shocks. And the demand then was declining not as a response to higher rates, but because of the external shocks. Currently, the higher level of key rate is the reaction to the overheating demand, while the rest of the factors play up to its expansion, and that is a very core difference. And so this ability to comprehend the length of the period of maintaining the high key rates has shaped themselves up over the past few months. Apart from the new data, we also started emphasizing the fact that going back to inflation will require a lengthier period within which tighter monetary conditions will have to be maintained. And so last month we started also saying that we were ready to raise the rate if the risks of inflation materialize. And so our updated key rate forecast doesn't call for the key rate to be brought down this year. And your second question was about if the deposit income is higher than the key rate by several percentage points. Usually the deposit rates are higher than the key rate. And this is what the banks are using for their marketing purposes to bring in new customers. And so here you must be very cautious about such rates, because very often such interest rates are being proposed only for the first few months, after which the rate is brought down. And so you've got to be cognizant of that. But if we talk about the mass depositors' rates, principally speaking, they are comparable to the key rate. And up till now, they have been comparable to the key rate, which has been around, has been in effect a little bit over 16%. Was the interest rates for the most attractive deposits without any special terms. So actually, average rates are indeed lower. As far as the future situation in the deposit market is concerned, the possibility of the deposit rates being higher than the key rate may come from the expectations for the key rate to grow. I mean, if the banks are expecting that the key rate will grow, they may keep the deposit rates higher than the current key rate. And as these expectations weaken, as the inflation risks dampen, such effect will dissipate. Thank you, dear colleagues. Elena Fabrichnaya. Elena Fabrichnaya, Reuters. Could you please tell us whether you assess the risks of inflation? Because the government has raised duties upon certain consumer goods from non-friendly countries. Maybe there's a certain secondary impact. And my second question, certain experts during the Silence Week proposed that the central bank should reduce the key rate like the Central Bank of China did it. Could you please tell us whether you are watching over what the Central Bank of China does and try to correlate your policy with theirs? As far as the duty is growing, it's always a pro-inflationary factor. But what we think is that the effects from the current decisions will be restricted, because it will impact not a big list of products from the consumer basket, not more than 7%. So we feel that these effects are going to be limited. Now, as far as our observing the policy pursued by other central banks, without doubt, we are mindful of what other central banks do. and we also watch over the situation in China, not only the Chinese central bank's policy in terms of what is going on in the Chinese economy, because this is our key trade partner, but as far as their key rate decision is concerned, they do pursue a different monetary policy regime. Besides, their problem is not the high inflation, but the low inflation, because currency China is balancing over the zero inflation mark, and so they are pursuing the policy which is diametrically different from ours, because our target is to reduce inflation, where their target is to avoid deflation. Thank you. The next question comes from the city of Kazan. Alexander Hevronin, Tatar Information Agency. Price growth is currently brought about by high demand. Isn't there a concern that due to the subsidized mortgage coming to an end, the available money would be spent by people upon other available goods which are available there apart from the housing, and a dramatic price increase will happen? Or the subsidized mortgage ruled out will be disinflationary? Second part of the question, previously when people would buy new housing, they would always buy some accompanying services and products like furniture, like new plumbing. Now, will the structure of consumer demand may change because of that? Maybe it has already changed. Some indicators, first indicators, are available already there? Thanks very much for your question. The basic fact due to the non-specific subsidized mortgage will be the inflationary pressure coming down. Although the housing is not part of the consumer price index, but any high rates of issuing any loans, subsidized mortgage, that brings to the money mass growing, that brings to the internal demand growing, and if this growing demand is not equal to the supply demand, that really flows out into price growth. In the housing market, actually, we've been witnessing the very fast price growth, even faster than the inflation growth. And so what we think is that households, primarily, any available money would put into savings, particularly considering the high deposit rates. Well, some may as well definitely consume more, but we feel that the bigger share will be saved, particularly considering the market rates growing. Now, as far as any altering consumer demand structure, I would say that it's premature to talk about it, because such effects are not taking place overnight. Some housing bought with the help of subsidized mortgage are still being built, and so the future owners will come into ownership within the next few years, and that will definitely create big demand for renovation services and products. People will continue buying housing. Let me remind you that in our forecast, the mortgage will be growing at 7 to 12%. We're not talking about the mortgage portfolio declining. We're simply saying that this mortgage portfolio will demonstrate a more moderate, temperate growth without bringing about an overheating in the market. And so consequently, there will be a respective demand for renovation and outfitting and respective products as well. Mr. Zabotkin, based on the recent data, there is no reason for us currently to talk about cooling down of the demand for renovation products and services. In the second quarter, the price growth rate within these product category, like the general price growth, somewhat accelerated compared to Q1, meaning to say that some things out of this, I mean, list of products and services are specifically of a consumer kind, but a considerable part of renovation products is very much sought after in other construction processes, and so the prices for them are going to be defined by an aggregate demand from all sectors and walks of life. Thanks very much, dear colleagues. Your questions, Tatiana from Kommersant. Tatiana Idovina, Kommersant. You mentioned the influence of the government incentives and the government contracts upon the corporate lending. Are there any quantitative assessments or maybe certain general assessment of the dynamics? Is it stable in its impact, or is it changing in time? One of the manifestations of such an impact is subsidized mortgage. because we saw that the issuance of subsidized mortgages were primarily taking place within subsidized programs, which created a certain serious outcome, non-individualized mortgaging. Within corporate lending, there are much fewer subsidized programs, but the propensity amongst the businesses and enterprises towards taking loans does not only depend upon the incentives and the subsidization of the interest rates, but also upon the government contracts. Meaning to say, not short-term government contracts, but long-term. When these long-term are available, then businesses are more eagerly taking such loans, but it is impossible to separate it quantitatively. Is it not, Mr. Zapotkin? I would say that it's a problematic thing to do, because any statistics in such situations would rather confuse one than give you a very sound level to assess things. But what is important to understand is that irrespective whether it's a corporate lending growing within specifically a market part of it, or because businesses are taking loans in order to engage in an activity aimed at meeting the government demand. What is important is the overall level of demand in the economy that they respond to. Now, where the government lending programs create additional lending or credit impulse, this is the likely case was with the subsidized mortgage, when the level of rates for such loans is unrelated to the market rates. And so in such a case, when inflation grows and the inflation expectations are growing, that makes it even more attractive to take loans within the framework of such programs. And so what happens with such programs, they work pro-cyclically, strengthening the credit impulse in the economy in terms of the physical volume. Thanks very much, dear colleagues. Your questions, Georgi. Georgi Primitin, Forbes. Recently, the Credit Institutions Standards Committee approved a mortgage standard. What could be the responsibility or accountability of the banks which are not going to observe it? And my second question is, in the middle of July, the publication of the daily statistics for off-exchange currency trading was stopped. The one which was started back in April. The central bank explained it, that was done in order to avoid sanctional impact. Anything has changed since then, and in what way the public, the publication of such statistics may improve the situation in the FX market? Thanks very much. As far as the mortgage standard is concerned and the bank's liability or accountability for the standards to be observed, the ones that are being produced by the Standards Committee. On the basis of the banking associations, there's a Standards Committee, and so finally the standards for the mortgage lending have been prepared because we thought that it would be very important to have such standards in order to reduce the dubious practices when banks confuse and mislead consumers. There is such a standard, but you're coming up with the right question, of course. In what way one should supervise this standards compliance, because this is not the kind of a norm that the central bank institutes, the one which has supervisory authority. So we all understand that there should be such a responsibility, otherwise such standard is not going to be followed. And so within the community, there is a discussion taking place right now how one should better go about it, because, as you say, there should also be a supervisory standard, the standard how to supervise such standards. And so this is an ongoing debate about who is supposed to do this supervision, either the Bank of Russia or the committee. So we're still discussing it, and hopefully we will come to some sort of resolution in order for there to be liability and accountability. But we do welcome the situation when the market players themselves can follow the compliance procedures to observe certain rules. That would have been proper, but this is not yet final. Now, as far as the publication of data is concerned, yes, indeed, in April we started disclosing it. Later on, we stopped publishing it because we do see the risk of the secondary sanctions. I mean, of course, the sanctions that occurred since then are not related to these publications, but in order still to reduce such risks, we made such a decision, and we do not expect anything to change in this yet. Thanks very much. The next question comes from Evgenia Pishminaya from Bloomberg. Evgenia, please. Good afternoon. The Bank of China terminated correspondent relationship with the Moscow Exchange, and so still under question is whether correspondent relationships will remain with the only other counterparty. In case the exchange trading stops, what kind of the Ministry of Finance fiscal rule extension you see? Because previously it was expected that the FX is going to be sold into a centralized market. So in what way the Moscow Exchange sales are going to be allocated and how that may impact the ruble? Second question, in terms of the cross-border payments, my colleagues previously raised that questions. Big problems are currently related to it. Do we allow that because of the fear of the secondary sanctions, the banks of other countries, even from the friendly nations, Russia may end up being in the financial blockade? Do you have any scenario for that? And if I may, I also would ask you my third question about the overheating. Could you give us your assessment of the scale of the Russian economy being overheated? Any quantitative one? I mean, the demand is higher than the supply by 2 to 3% of the GDP or stronger. What are the indicators that the board of directors of the central banks is following in order to understand this overheating? Thank you. As far as our fiscal rule compliance is concerned, we can do that both the exchange platform as well as off the exchange, because that won't affect the exchange rates at all. But if these risks materialize, we'll explain specific mechanisms, and I can tell you that we are ready to do that off the exchange. As far as the cross-border payments are concerned and the risks related thereto, we certainly do consider different risk scenarios, and we prepare ourselves for different scenarios. But overall, I think that the payment problems is going to be dealt with by companies in different ways, because many countries have such a requirement to continue trading with Russia, to continue exporting and importing, and so ways to pay will be found. So we do take into account that the transactional costs by businesses in such an environment may grow, which may generate an impact upon exports, imports, and we do take into account in our monetary policy decisions. As far as the overheating is concerned, yes, indeed, we do believe that the economy is overheated. I shall remind you that what we understand by it, overheating, or the positive gap of supply, is such a situation of an economy when the amount of issuance exceeds the potential GDP. I mean, the issuance of products, services, and goods which may be produced by the economy, taking into account the existing available resources and production chains without quick price growth or the inflationary spiral growing. So when assessing such an overheating, we take a look at broad indicators, the basic ones being unemployment, the real wage growth, lending dynamics, and the most important one, inflation. The quantitative indicators of overheating is what we are not talking about, because this is not an observable kind of a value, but the inflation dynamic is an important indicator of the economic overheating. At the same time, we have model assessments which describe the following thing. In the first half of this year, the scale of such an overheating, I would say, was the maximum over the past 16 years. I think on the eve of the 2008 it was slightly higher, and that really exacerbated the depth of the economic decline, which in many ways was brought about by external reasons. And by the way, that demonstrates the kind of risks that there are and may happen if the overheating may become stronger. So our monetary policy is specifically aimed at making this issuance gap contract so that the economy moves and shifts itself towards a more balanced growth path. Thank you very much, colleagues. Please, Maria. Maria Filushna, Bitcoin. European Commission prohibited the citizens and businesses to participate in the asset swaps, and because of that, the foreigners may get scared and not agree to a voluntary swap. How, in this case, the asset swap may look like, and is there any chance for this at all? Thank you. It is very difficult for me to comment on the European Commission decisions which are aimed at making the European Union citizen not prohibiting them from swapping their assets. But we're going to consider any ways and means in order to protect the legal interests of Russian investors. So we shall consider all options. Thank you. Marina, over there, please. Marina Pimenova, NTV Business News. Can it happen right now in such a way so that against 18% interest rates, the people in the country will cease taking loans while businesses will continue at floating rates, and so consequently there's not going to be any particular impact upon inflation? My second question about the fraudsters. New fraud schemes are appearing when the fraudsters are saying that they represent the utility company or the pension fund. They call people, they ask them to give them a government electronic services platform codes, and what do you think should be done about it? Maybe there should be a grace period for people of elderly age who are being threatened by fraudsters in order to cancel anything like that happening in the future. Thank you. But by our decisions, we are impacting the lending dynamics generally, because what we're trying to monitor is the overall lending dynamics. But I have already mentioned the problems related to the floating rate lending for businesses, because many companies did their estimates and we sent such signals, that the rates may start going down this year. And so they were quite eager to take loans. But right now, we have raised our assessment of the trajectory of the key rate, not only for this year, but for the next one as well, and the year after that. And I believe that both businesses and banks are going to take into account when making their decisions whether to take or issue loans. The retail lending dynamics indeed may slow down quite significantly because of the mortgage cooling, amongst other things. And so generally what we expect is that the lending growth rate, as they say, will come into a balance, which will help one to quicker bring inflation to our 4% target. Yes, about the fraudsters. Unfortunately, what you are mentioning is happening. Indeed, the elderly quite often end up being quite helpless dealing with such fraudsters. But what we see, regrettably, not only the senior of age, but the younger ones without any proper education, and even some with the higher economic diplomas and degrees, and even the banking employees, they get hooked by such fraudsters. The grace period, the cooling period, I would say this is an important tool. We have introduced it into the money transfer sector. We are thinking about introducing it for what you are talking about. But for the elderly, we would also foresee that there should be a second opinion rule when people would be able to, give a power of attorney or designate a family member or someone who should be contacted for them to help make up their mind. So we'll try and definitely do more to protect such people from fraudsters. Thank you very much. Another question comes from online. Viktor Smirnov from St. Petersburg, internet publication. Why the increase of the key rate doesn't achieve the expected effect fully? Because overall inflation in the country continues to grow. Thank you. Well, first of all, The inflation growth rate, the lending growth rate have reacted to the tightening of the monetary policy, to the high key rate that took place last year. So if you compare first half this year with the first half last year, inflation has slowed down from the autumn peaks. If there were no such thing, I mean, no tightening, no high interest rate, let's say it would have remained 7.5, we would have had to face the much higher inflation and much weaker exchange rate right now. However, no quick reduction of inflation to 4% target is taking place. It's true because of different reasons. Overheated aggregate demand, high manufacturing activity, shortage of labor resources, and that additional demand is being further supported by high lending rates. And so when our tightening of the monetary policy is aimed at reducing the pressure upon prices from this additional excessive credit demand, so as to strengthen the incentives for the savings behavior. I'm always used to say that the monetary policy generates effect with a bit of a lag, which usually may take 6 quarters. And I would like to draw attention that the tightening of the monetary activity has already taken place. And after we had toughened our communication efforts, emphasizing that the monetary conditions are going to remain tough for a long period of time, then the mortgage rates grew, and so this change in communication stance will manifest itself, will continue manifesting itself still. It hasn't yet reached its full force. And so this monetary policy tightening was specifically necessary in order to bring inflation to 4% quicker, bearing in mind the inertia in all the processes that I've enumerated. Mr. Zabotkin? Well, the only thing that I may add is if you take a quantitative look at the way the interest rates have been evolving, be it for deposits or loans, the core changes in them did take place in the period between April and June, when it became apparent that there's no sustainable slowdown in inflation, and respectively that meant a longer period within which a tight monetary policy was to be sustained, and maybe additional tightening of it. So consequently, whenever we think about the measure to which the 16% rate have been good enough to improve economic conditions, basically that impact have materialized itself only starting from the second quarter. And to a certain part it was because there was an expectation of a faster inflation slowdown, and respectively the expectations amongst the financial market player analysts and in our forecast that the rates were to go down faster, and against the high inflation expectations, effectively that created, that supported a very high demand for lending also throughout the first half of the year. Thank you. And dear colleagues, Natalia Trushina. Natalia Trushina, the Moscow Komsomolets. Could you please tell us, the Bank of Russia for half year kept its rate at a very high level, but nevertheless inflation based on the January forecast didn't go down. The experts believe that just one rate increase won't bridle inflation. Has the central bank undertaken any measures with other government agencies to curb inflation? If you didn't, why are you going to do that? Because there are different factors like certain tariffs that you referred to in other industries. My second question may be naive, but could you please explain to me, let's say, if the 16% didn't slow down inflation, why 18% will? Why not 19 or 20? If the shock treatment is not good enough, why shouldn't you bring it up as high as possible in order to end up having a low inflation towards the end of the year? Thank you. Well, first of all, the rate increase which took place last year, it led to lower inflation. In the first half of this year, inflation went down compared to what we remember during the autumn peaks. Even if you take a look at the second half, of what it was in the second half of last year, it didn't go down enough It is going down slowly, and what we're concerned by is that the stable inflation components have become stable. But what does it mean? It means that additional tightness is required for monetary conditions in order to renew the downward movement on inflation, particularly as far as sustainable components of it are concerned. So because of that, we have brought the rate up, and we will observe the data further. If we see that rate as itself is not enough in order to bring inflation to target next year, we do not rule out that the key rate will be further upped. Now, as far as our interaction with our government agencies is concerned, because every government agency acts within its authority, our authority is the monetary policy, and so are able to influence the aggregate demand. As far as the government generally is concerned, of course, the biggest contribution that the government may make into controlling prices, as well as into the timeliness of the way the monetary policy responds to the deviation from the inflation target, is a very balanced, predictable fiscal policy. So the fiscal rule is indeed very important in this sense. Undoubtedly, through the monetary policy, we're able to impact the aggregate demand. And what we're saying is that the demand growth is not being supported by the same kind of a supply growth. Of course, if the supply expands faster, that would narrow this gap. And that is why the government-supported program within the government authorities that are aimed at improving the labor productivity, to unbundle certain industrial and sector things, which improves the economic potential, also carries the potential to create the proper conditions for the inflation to go down. And that is why we continuously communicate. We exchange data and information with the government. We are quite familiar with the projects that they are working on and the ones that they discuss. And in the same token, like the government do, the government also takes into account the policy that we pursue. Thank you very much. Jana, please. Jana Churchka from RIA Novosti. Can one say that the peak of inflation has been passed, and does the central bank expect additional disinflation in August? And if so, can it affect the ability to achieve the key rate overall? And my other question is about the mortgage market. When one can expect the mortgage market to soften? Should one buy housing, or one should be better off keeping money in savings accounts? As far as the inflation peak is concerned, if we are to talk about the monthly inflation statistics, indeed in July, the inflation data, high inflation data, also included the utility tariffs indexation, and so the monthly picture is going to soften up in July. But as far as the stable inflation rate is concerned, that would start declining slower. But what we act upon is that under the influence of our monetary decisions, there will be a very significant decline in inflation, particularly in the stable parts of it. Deflation in August. Mr. Zabotkin, the August deflation, as we always are saying, you can't talk about deflation within any separate month, because deflation is an outcome of a stable decline in prices, which is really worth talking about within the framework of 12 months or longer. Whatever takes place in August, that would be a seasonal price decline of prices for fruits and vegetables, which, amongst other things, if it's very strong, it may lead to overall price levels coming down as a one-off thing. So I would dearly ask you to avoid using this as any economic term. But with respect to the overall dynamics of this stable price growth, the peak occurred in the third quarter last year, in autumn, September to November. Then it started slowing down in Q1. In the second quarter, somewhat increased. July, most probably, will be sufficiently high level, even seasonally adjusted or adjusted to the tariff increase, which to a certain extent should be put in parentheses. But then, throughout the second half of the year, we believe that the current price growth rates will be considerably lower than average throughout the first half of the year, and that is exactly what has been written into our forecast. As far as the mortgage market is concerned, these disbalances may well disappear, but slowly and steadily. No, that won't happen, because we expect the mortgage portfolio to continue growing by 7 to 12%, which is lower than last year, but nevertheless still growing. Now, as far as when one should decide to buy housing, individual life situations are very individual and different, but what we act upon is that the housing price growth, price growth rates will slow down, and possibly it will be lower than the household income growth rate. So this should be borne in mind when deciding to buy new housing and on. Thanks very much. The next question comes from Krasnodar, from Artyom Permyakov, RBK Caucasus publication. Good afternoon. Elvira Sakhbizanovna, as of July 1st in Russia, the subsidized mortgage program is no more. How that may affect the real estate prices? Will it help for this market to cool down, including the south of Russia? And if that is the case, isn't there a risk that the developers will stop planning for new projects or won't complete the ones which are currently under construction? Well, thanks very much. In the south of Russia, indeed, there has been quite a spree in terms of the housing price growth, because there was quite a strong demand for housing in the south of Russia. And so we believe that cancelling or suspending the non-personalized subsidized mortgage will bring about a certain cooling of it. It's difficult to say what will be the housing price dynamics in the real estate housing. Real estate, particularly if we look at it through the regional lens, because there are many different and diverse specific factors, but the overall effect should be such that the housing prices should stop growing at such a speedy rate. Now, what is important to note, as we used to say, not enough to take a look at the interest rates for mortgage sector, how lower they have come down, but the availability of housing in terms of the correlation between the household incomes and the real estate prices. So quite probably the availability will improve because the real estate prices was much faster than the income growth and so in a number of regions that really negatively affected the housing availability. So we are of the opinion that this availability is going to be improved. So don't expect that the prices will immediately adjust themselves, like the economists are saying. This could be a bit of an effect of a delayed splash, and so that could be of a certain scale. Mr. Zabolkin, would you say something? Well, I also would like to remind you that another important thing that we've been quite worried about is the prices in the primary market and the secondary market running apart from each other, and against a lower scale of subsidized mortgage, one should expect that this gap between the primary and the secondary market is going to narrow. Oh, I forgot to respond about the developers' plans. As far as the developers are concerned, yes, indeed, the demand growth rate is going to be lower, but the demand shall continue growing, and that should be borne in mind. Of course, there won't be such a race in the financial profit-making, but over the past few years, when the market has been so much actively developing, the biggest developers have set up a certain safety cushion, and they have sufficient resilience in order to complete whatever has already been started and maybe even begin the new project. But undoubtedly, this situation is different between every and each developer, like businesses that can be over-credited, who expanded in the market through excessive lending. They can run up against difficulties, but generally speaking, we are conducting continuous monitoring, and so we don't see any risk to the financial stability here. Dear colleagues, please, Elizaveta. Elizaveta Morskaya, Russia 24 channel. Could you please tell us what's going on with the process of creating and seaming together the BRICS payment system, I mean the independent payment system, which could be based upon the modern technologies such as digital currencies and blockchain. We are currently debating, together with the Minister of Finance, this project with our BRICS partners, like I used to say in the past. It is a very complex and a multi-faceted one, so this is an ongoing work and we are discussing it continuously, which means that we will bring into it all possible means and ways in order to make sure that it comes true. Other colleagues, please. Ivan? Ivan Schligin from FORMAG-RU. The measures that so far have been decided upon, are they enough to balance things, or maybe certain additional measures are required apart from the key rate? And that is the first question. My second question about inflation. What should be used in order to feel better and more convenience to monitor it? Because some are watching over the weekly inflation indicators. Maybe one should watch monthly ones, or maybe certain other components should be traced. Thank you. As far as the first question is concerned, the higher lending rates generally do produce a deterring effect upon the lending. And to our mind, the most important instrument that the central bank has in its toolkit is the key rate. Sometimes some are proposing to utilize macroprudential measures instead of the key rate, the ones that are aimed at certain lending sectors. We're firmly convinced that macroprudential measures in no way do substitute the key rate, because the key rate is effective not only upon certain individual lending parts, but also upon the savings and the attractiveness of it, while the macroprudential measures are aimed at preventing the risks to the financial stability related to excessive overlending on the part of certain borrowers. And so the consequence of it could be the allocation of lending inside a single sector between riskier borrowers to less risky one. If we talk about the consumer lending, from consumer lending towards the corporate lending, so that might not really impact the overall lending growth rate. So the basic tool here is the key rate. Now, as far as how one should monitor inflation, we apply so many inflation indicators. The weekly ones are far from being perfect. We do take a look at them, but it's impossible to make any conclusions based on the weekly inflation, because there is a very limited number of goods and services that it includes. I would ask Mr. Zabotkin to share more details about the indicators that we follow in order to follow the current inflation pressure, because that is the most important for us. Some are saying about the annual inflation, but this is really a rear-view mirror rather than front-looking windshield. Yes, in order to take too much of your time, we do have indeed a very broad set of indicators, starting from the general one, like the consumer price index, then further down to narrower product baskets that we are tracing. Non-exhaustive lists these are that do not cover the full diversity of indicators that we run down in our monthly report, which is the consumer price dynamics. I mean, the kind of indicators that are there, these are an important part of the overall dynamic analysis. Now, something that we are very much cautioning against, I mean, the analysts, to think that there is one or maybe two or three indicators which will project the full picture about the current price dynamics and even the price dynamics throughout the 12-month period, because famously, the inflation as such is
a change of the general level of prices, if you discard, if you net away from it, the parts which currently seem to you, I mean, the one that you really don't like, in order to come to the kind of conclusion that you want to come, and so basically you are doctoring the data in order to make it fit the kind of answer you're looking for. You're basically losing data, losing information, and end up with a biased picture. What we can tell you right now definitely is that in the second quarter this year, and as far as all indicators are concerned in inflations this way or that way, the price growth rates was higher than in Q1, something that must not happen if the monetary terms and conditions are tight enough. So further tightening has been prescribed in order to make sure that the decline to 4% inflation is irreversible. But apart from the inflation indicator, something that we also pay attention to is inflationary expectation. I mean, how the observed inflation is being perceived, that is a very important thing, how people see it and what kind of inflation they expect, because based on that they make up their mind to save, to consume, and that directly impacts the ability to bring inflation to target. Thanks very much. The next question comes online from Denis Yulachovsky from Yulachovsky YouTube channel. Good afternoon. Very frequently, and including today, you are saying that the tight monetary policy produces a certain lag in terms of the inflation outcome. 16% has been quite steady. Now, what are the reasons that it's not enough? We fell short of 2 quarters in order for 16% to produce the necessary outcome. I mean, from the very beginning, in December 2023, you should have made it higher, or maybe that the sort of the current inflation in terms of is something that it would be difficult to neutralize with a higher key rate. The second factor that you mentioned, shortage in the labor market, and the experts do say that that's true, but at the same time we see tighter immigration policy. Is the central bank going to assess the risks related to fewer migrants coming into Russia? As far as the labor market is concerned, let me begin with this. Of course, right now, this is one of the basic indicators. I mean, the state of the labor market that we are paying attention to, and the labor shortages are going, the recent surveying amongst businesses shows how much. Well, 72% of businesses already believe that the basic constraint is not enough labor, and that is a very important indicator. The immigration flows do influence the level of tensions in the labor market. We do take into account, of course. Now, as far as the sufficiency of the monetary policy tightness is concerned, what we were able to see is that after the rate increase, we noted the decline of the inflationary pressure, but the view expressed by the board of directors was that additional tightness is required because inflation in Q2, like Mr. Botkin has just mentioned, including the stable components, ended up being higher than compared to Q1. So I suppose we were not sufficiently conservative in our assessment of certain indicators, including, like I've already mentioned, the influence over the lending growth from the fiscal programs, not just direct subsidization like in the mortgage program, but overall increase in the fiscal expenditures. I mean, for the understanding that it might lead to a stronger credit multipliers, if you will. And secondly, also under the influence of our forecast of the trajectory of the key rate, the expectations manifested of a quick key rate decline, which really pushed upwards the lending activity because these changes took place in the winter, and so currently we would see it being reflected in the economy. So we thought that additional tightness was necessary, and that is why we raised the key rate. Mr. Zabotkin? Yeah, a bit of semantics. It's not that it pushed us towards it's pushed itself towards the lending activity, but maintained it at the level which was not really to correlate with making sure that the inflation goes back to 4%. Thanks very much. Anna Kalinina, Izvestia newspaper. If I may, two specific questions. First of all, about the way you work together with other government agents, because it was yesterday that Mr. Peskov from the Presidential Press Office said that the government, together with the central bank, is engaged in additional measures to curb inflation. Of course, he mentioned that the targeting is the first important story to it. The second point was about the mortgage, suspending the subsidized one, but the family mortgage was broadened, and so families with 2 children which are about 6 years of age, that would also cover the individual housing construction. Well, this expansion, wouldn't it play down the suspension of the subsidized mortgage? And also, do you support the Minister of Finance that one should really raise the Arctic and Far Eastern mortgage programs at 2%? And my third question about the systemically significant lending institutions, what are the parameters that you're going to follow when you would make your list of systemically significant lending institutions, and may that list see the foreign credit institutions being struck away from it? If I understood you correctly, your first question was about additional measures to restrain inflation by the government and the central bank. We are trying to target demand. The demand is indeed depends upon the fiscal policy, and so in as far as this is concerned, that is the government function. But the government does influence the supply side now, whereas in our case it's demand side, and the government, in as far as the fiscal policy, the demand side and the supply side. And there are so many measures, it's impossible to list them all, but the government is currently looking into the development of the infrastructure to debottleneck things. They have a lot of programs to improve labor productivity aimed at increasing the potential. And so here our interoperability in terms of our policy making is taking place. As far as the mortgage is concerned, here a general rule is applicable. The bigger is the scale of the subsidized programs, less is the space available for the market lending. The bigger is the scale of the subsidized mortgage, less will be the space for the market, because the market-based mortgage is quick to react to the key rate, because after the increase of the key rate we see that the market mortgaging dramatically contracted. So we take it all into account into the subsidization, and we do see how that impacts the market mortgage processes. As far as the parameters of the subsidized programs, including the regional ones, that is the bailiwick of the government, but the current rates that we see do include a lot of subsidization for such mortgage sector. As far as systemically significant lending institutions, we will update the list in autumn, and we shall look into all of the indicators that point to the systemic significance. So far, we haven't conducted such an analysis, and to tell you which banks shall remain, which won't, we're not ready. But to, exclude from it the foreign subsidiaries, I mean, the Russian subsidiaries of the foreign banks, no, there's no reason for us to do that. Mr. Zabotkin, please, a very quick remark. To make any conclusions about the intensity of the family program, subsidized programs will continue, as would be premature to do until the end of the third quarter. Thanks very much. The next question, Rita. Margarita Mordovina, RBK.
Our question is about RMB, yuan. Our colleagues from the Vedomosti newspaper mentioned that some of the Chinese banks do split yuans into clean and dirty one. Dirty one, which are related to Russia, were bought in the Moscow exchange, and so the banks really don't want to work with this dirty yuans. Does the Bank of Russia confirm that there is a problem like that? And if so, what are the ways to solve this problem? We do see problems in cross-border payments and when using foreign currencies and the risk of the secondary sanctions. And I've mentioned it more than once. We are not in a position to comment in detail the mechanisms that may help us to resolve the problems of the cross-border payments. Thank you. Next question online from Anna Gromova. Please, Anna. Good afternoon, Anna Gromova. Anna Finance page. My subscribers are concerned whether there's no risk for the deposits in the banking accounts to be frozen because the rates are very attractive and people want to save. Can you please calm people down in as far as the safety of their savings are concerned? And my second question about the family mortgage. The family mortgage has been extended. We've been waiting for 10 days to hear about the terms and conditions. In another 10 days, Marat Husnulin said that maybe in autumn such terms are going to be reconsidered. Clearly, the government is trying to find a balance between being able to support the families and the developers as well. What other measures are being undertaken in order for this balance to be found so that developers don't experience any quick cooling in their sales, but also to enable the families to buy housing? Maybe some interim rate should be considered like 6% or something else? Thank you very much. As far as savings, household savings are concerned, generally speaking, the deposit rates currently are quite attractive for people to save. They enable not only to protect one's savings from inflation, but also to earn some. So specifically, people arrive at their own conclusions whether they should save or not, depending upon their lives situations. As far as the possible reconsideration of the subsidized family mortgage program is concerned, the central bank's position is that in order to raise that as an issue, one must first have in one's hand data about the more sustainable mortgage growth. Based on the July data, it is impossible to conclude anything like that, because in June, the mortgage growth rates were high, and those who wanted to borrow in July changed their mind and started doing it earlier in June. So for almost 2 weeks, nothing was really working fine. So you need to take a look at not only at the August data, maybe not only the August, but also September and October in order to come to something definitive. As far as the so-called balance is concerned, I mentioned it more than once. We believe that the developers have already established a safety cushion. Mortgage market is not going to contract overnight. The mortgage portfolio will continue growing. And the most important thing that I believe one should pay attention to, so that our decisions improve the availability of housing. That is the most important thing, so that the housing price growth would not be running ahead of the household income growth, so that the mortgage solutions could be accessible by a bigger mass of people, not only those who are entitled to the mortgage family and subsidized mortgage. So you need to bring down inflation. You need to bring down the market rates. I shall say it again. The mass mortgage started growing without costly government programs when we reduced inflation, and for a certain period of time it was at 4%, and the market rates were at the level of 8%. And so mortgage housing became available to a big number of people. So the mainstream thing is to make mortgage available linked to the low inflation rate. Thanks very much, Ekaterina. In the last row, please. Good afternoon, Ekaterina Litova from Vedomosti. You have already commented on the corporate lending and the consumer lending, but could you be more specific? Does the central bank consider the introduction of macroprudential measures, specifically towards the corporate lending? And my second question is, don't you see the need to introduce administrative disciplinary measures in order to reduce the tensions in the labour market? And what kind of measures those could be? Well, the second question is, I don't see such measures. The fact of the matter is that the tension, I mean, the labour market, to improve it, certain measures, I mean, to bring into the employed a bigger number of people, that is something that the government is working on and coming up with various ideas. But the basic measure, I would see, is narrowing the gap between the growing demand and supply, which creates this labour market tension. As far as macroprudential measures for corporate lending is concerned, principally and theoretically this is possible in some jurisdictions, in some countries. There are such macroprudential measures in place, but again, these, I mean, their purpose, I mean, if they are introduced not to impact the corporate lending growth rate, but to impact, I mean, to deter the lending activity amongst risk-wrought borrowers, because as far as households are, we know it, because whenever they have accumulated a lot of debts, they're not able to service their credits, because in businesses, you know, this could be forecasted, but quite often people in businesses take loans for mergers and acquisitions or to expand out into the market based on the lending resources without being able to understand all the risk. And so in order to prevent such occurrences, it is possible to apply macroprudential measures. For some time ago, we have had a discussion about it. We haven't yet arrived at any final decision. I mean, there are so many questions about it, says Mr. Zapotkin, but to demonstrate why is it that we're saying that the macroprudential measures are not good enough in order to impact the overall lending rate growth as opposed to the key rate. What macroprudential measures do? For the banks, the issuance of loans become less attractive. I mean, the ones that they're more profitable to them, they're higher risk ones and more profitable because against the high risk they get a high interest rate from a borrower, even if you take into account the adequacy ratio without any additional markups. And so against things being equal, banks find it more profitable to issue loans with bigger risk. But if through macroprudential measures we reduce the attractiveness of the high-risk lending, but if, let's say, such loans remain attractive, I mean that the rates are not so high in order to deter the demand for them. So the banks will shift their lending activity into the low-risk lending. So overall, demand growth will remain exactly the same, but with a low risk. So macroprudential measures are quite important to be able to control the risks in the financial system, credit risk in the financial system, but without changing the level of the overall level of the interest rates, it would be impossible to impact the overall lending activity. No, it wouldn't be really possible. It also affects the level of the savings as an option of it. That was the second side of it. Yes, that is exactly why the key rate is an effective instrument of macroprudential correlation, and we're not going to apply it in order to impact the lending growth rate. Dear colleagues, we're taking too much time. I suppose this is going to be the last question. Ilya, in the second row, please. Ilya Usov, Frank Media. As far as I recall, quite a serious
portfolio currently in the lending side of things is pegged to the floating rate, 50% of it about. And so with a much lengthier, I should say, monetary policy like that, don't you see any risks for the businesses that used to borrow, hoping that the key rate might go down? And my second question, you mentioned that your decision, amongst other things, was related to the sanctional risks. Do I understand correctly that you meant cross-border payments in this case? And what kind of impact they produce upon inflation? I understand that this is pro-inflationary, but do you have any figures to quote, like in what and how you estimated it? Yes, the key rate increase will reduce the floating rate packed lending, as far as the new lending is concerned. I mean, companies and banks understanding what the key rate trajectory is going to be may not be as active taking them as they so far have been. As far as the already issued loans may impact the businesses and banks, through our system, we are monitoring the extent to which the companies are eager to service the loans at a higher rate, because whenever the banks do it, they definitely analyze the extent to which a borrower will be in a position to service such a loan if the rates go up. I am sure that the banks definitely took into account when they were borrowing at a floating rate, and also they looked at some really good profit levels. We do the analysis of the risks to financial stability, also the interest rate analysis risks. We don't see such risks, but as far as specific companies are concerned, there could be certain problems. I mean, the companies in the first place that have already taken previously a large amount of loans on the floating rates where debt to EBITDA is above a certain standard. But problems like that also emerge in situations when businesses taking loans not always consider all the risks as far as the sanctional, as far as difficulties with the cross-border transactions are concerned and what the impact it might produce upon inflation. On the one hand, difficulties in such payments may reduce imports, although this is not happening right now because for the past few months imports have been at a stable level, but one should take into account that in the statistics we see the imports that had already been paid in the past. There is a bit of an advance payment, but the difficulties with paying for imports may emerge in about 2 to 3 months in the statistical data. But overall, if we see import not growing, this is the factor which, against all things being equal, does play up to the ruble appreciation. And the ruble appreciation is a disinflationary factor. But such cross-border payments, including working out new payment mechanism, brings about to higher transactional costs for importing companies, which may bring about higher prices for imported goods. So these two factors may offset each other. Now, the extent to which they may offset each other, whether it is going to be pro-inflationary or disinflationary, it is yet difficult to say in terms of the quantitative aspect to it. Mr. Zapotkin, what you would like to say something? Right, yeah, that shall depend upon how successful private businesses are in coming up with the various ways to bypass additional sanction pressure. Of course, if the sanctions worsen trading conditions for this country's economy against all other things being equal, that is equivalent to a certain deduction from the economic potential and in its nature pro-inflationary as a result of the FX part, correlating with various price factors and prices at which imported goods are available to us from the global markets. Thanks very much to our speakers and thanks very much to you. Looking forward to see you here back again.